Hi, good afternoon, everyone. I guess we can get started. We were waiting, giving a couple of minutes for everyone to log in. I think we have a considerable amount of participants, so probably we'll get started. So, first of all, I warmly welcome all of you who have joined with us today on this webinar series from both from Sri Lanka as well as from Maldives. So, on behalf of Deloitte, all of you are greatly welcome into this session. So, as the starting point, let me give a quick introduction about our thinking behind the ORBIT series. So, being a part of a professional service organization, a global multinational professional firm, we get access to a lot of information, we get access to a lot of insights, thoughts, materials, technical content, and we also have a lot of professionals who are specialized in various fields. So we thought it's important that we share some of that knowledge with the wider professional community, both in Sri Lanka as well as in Maldives. So that was the main thinking behind coming up with this series, which is Orbit. So it's a brand new series, and our very first session is on ISSA 5000 Unpacked. So we have a wonderful team of three professionals, three individuals who will be delivering this session today. So this will not be the only session that we are going to do. Obviously, in future you will meet us in many more sessions covering many more topics, representing Deloitte professionals from various divisions, various areas. So with that quick introduction, I will warmly invite Chathumin, Saviesha, and Thimansa to take up the session today. So I guess, Chathumin, over to you. Thank you.
So thanks for joining our inaugural Orbit webinar series. And to today's topic, we selected one of the topic connected to the sustainability. Since sustainability has emerged nowadays, a prominent topic which drives the businesses, their decision-making processes. And more importantly, sustainability also play a key role in the financial and the capital markets, specifically when taking the decisions by the investors and the lenders on the investments and the divestments and also the lending decisions. They are considering about the sustainability information provided by an entity. So this drives all reporting mechanisms of the nowadays the companies what they are providing in their annual reports. To cater this requirement, now it's not only the people are looking for the sustainability information, but also looking into the credibility of the information provided in the reports. So cater this requirement, recently International Auditing and Assurance Standards Board, they brought out a separate assurance related standard, which is called ISSA 5000. This particular standard was adopted in Sri Lanka as SLSSA 5000 and was mandated by Institute of Chartered Accountants Sri Lanka from end of this year onwards. So if any assurance provider who provides the assurance conclusion or an opinion on the sustainability information provided in the sustainability report, which apparently provided by the preparers who are joining today's discussion. So then your assurance provider will provide your report based on ISSA 5000 related guidance. In Sri Lanka is exactly the same standard Institute has adopted, which is SLSSA 5000. So in Maldives, also when in the future your assurance provider, when assuring your sustainability information, they will make use of this particular standard. So I'll first bring you one sort of quote which was given by the chair of the International Audit and Assurance Standard Board, which is a key theme which drives the implementation of this particular standard. So this is the ultimate objective of the introducing these particular standards, which to bring the trust, confidence, and ultimately ensuring the well functioning of the economies. So this particular standard will establish the trust and the confidence over the sustainability information provided by the preparers. So today's discussion, we will look into certain topics. Sometimes preparers might be worried why we should listen to a webinar which is on the assurance related standard. But this standard is not just applicable for the assurance providers, but also that is applicable for the preparers as well. Because these particular requirements which are coming through the standards drives the question which the assurance provider will ask you once they initiated an engagement with you to provide assurance conclusion or an opinion. And also you can prepare your organization to ready for ISSA 5000 assurance standard, which that brings new additional requirements which the assurance providers will look into. And also that standard will bring certain differences to the assurance report, what we used to. So new assurance report format also introduced together with this particular assurance standard. So those are the key areas which we will discuss during the today webinar. So before moving to the ISSA 5000 related discussions, so we'll first see the certain developments happened in Sri Lankan market as well as in the Maldivian markets and also the internationally with respect to the sustainability. So if you consider about the recent years, 2023, 24, and 25. So in year 2023, the ISSB issued IFRS S1 S2 standards. So earlier we had diverse set of sustainability standards. And ultimately, most of those standard setters get merged and form the ISSB through IFRS and introduce these two set of standards. And 2024, the CA Sri Lanka formally adopted these standards, and year 2025, the CA Maldives also adopted these two standards. So beginning from this year to 2025, the top 100 companies in Sri Lanka has already provided their sustainability report based on SLFRs S1 and S2, which are based on IFRS S1 and S2. In the European region, a lot of developments were happened. They introduced ESRS for sustainability reporting and also came up with various directions through the European Union, which specifically not the companies incorporated in the European Union should look into, but also the companies which are exporting the certain products to the European market. And also in year 2024, this ISSB approved ISSA 5000, the assurance standard. And Institute of Chartered Accountants in Sri Lanka, last November, they adopted formally the ISSA 5000 equivalent standard as SLSSA 5000. And internationally, the International Ethics Standards Board also looked into the ethical requirement which the accountant should adhere to when providing their assurance service on sustainability and brought certain amendments to the ISSA code. CA Sri Lanka also currently in the process of considering certain amendments to the code of ethics applicable for the professional accountants in Sri Lanka. So in the Maldives also, since the ISBA-driven code of ethics are applicable for the accountants, so these particular amendments to the code will be applicable for your assurance providers as well. And also the regulators also looked into the sustainability, and especially in Sri Lanka, the Colombo Stock Exchange in year 2025, they acknowledged formally the SLFRs S1 and S2, and they amended their listing rules and brought the mandatory compliances to the sustainability reporting through IFRS S1 and S2. The assurance is still not a mandatory requirement in both Sri Lanka and Maldives. But we can see the companies are voluntarily get their information assured through independent firms to demonstrate the credibility of the information provided in their sustainability reports. So this is an overview of the recent amendments to these standards and also the recently introduced reporting standards. So those are SLFRS S1 or the IFRS S1. So that brought set out the overall requirements for sustainability reporting, and also IFRS or SLFRS 2, which is about the climate related disclosures, and also the recently the Public Sector Accounting Standards Board also introduced IFRS S1 similar standard. So that also looked into adoption in Sri Lanka. And as future enhancements, the biodiversity related one practice statements we are expected in this year. And also there's additional 2 projects initiated on human capital and connectivity in reporting. So it's an emerging area and keep on developing. So we can expect more standards and requirements to come on sustainability. So why we need to have the assurance standards? The assurance standards establish the confidence over the information provided in the sustainability report. And also it safeguards the quality and the consistency in the reported information. And that provide obviously the transparency and accountability in reported information, which we use to the financial information, but that too is applicable for sustainability information. And also it facilitates the comparability of reported information across different organizations and also the time periods, because the assurance provider will look into the consistency of the information provided and they attest for the accuracy and the completeness. So the reason to have a separate ISSA 5000 standard is the emerging needs of to have a dedicated assurance standard for sustainability. So earlier, the assurance providers used to have the standard, which is ISA 3000 or in Sri Lanka SLSC 3000 standard. That is not a dedicated standard for sustainability. It's a generic standard which is applicable for any non-historical financial information related areas. But now, since we have ISSA 5000 standard, so now we have a dedicated assurance standard for sustainability. So the assurance providers will have a clear direction how they should assure the sustainability information. Earlier, we didn't have it because the assurance providers had looked into a general standard which is applicable for any non-historical financial information. And also together with the introduction of the standard, a few amendments brought into certain other existing standards. And also the ISA 3410, the greenhouse gas assurance engagements standard will be withdrawn upon the effective date of ISSA 5000. If you need to get a certification on your greenhouse gas emissions, a separate certification, earlier the assurance provider had used the ISA 3410 standard, but they will also use the ISSA 5000 standard for attestation over the greenhouse gas statements as well. So more importantly, the effective date will be the periods beginning on or after December 15, 2026, or as at specific date on or after December 15, 2026. So it's also important us to have a look about how we should select an assurance provider based on this standard. So this is more important for the preparers because you are the one who take that selection decision. So when selecting the assurance provider, we know usually the people looked into the expertise, the credentials of the assurance provider. And also importantly, you should also consider about the independence and the ethical requirements applicable for the assurance provider. If you engaged an assurance provider for advisory, implementation, or disclosure preparation work relating to the sustainability, so there might be certain conflicts coming in engaging the same assurance provider for the same consultant for assurance related activities as well. So you should have a separation between the consultant and the assurance provider. And this stand is also stressed out. The assurance provider should adhere to the quality management standards. So accountants should adhere to ISQM 1 or equivalent standards at the firm level. And the firm which attesting your assurance report should have these quality management systems. And also the clear idea has to be there, the scope given to the assurance provider, since your annual report contains various information. And also we should also look into the level of readiness of the company. So these are the few areas with the assurance provider we looked into. And also again, that drives your decision on the selection of the assurance provider. So first one is on whether the firm is having the ISQM1 related quality management system, and also whether the assurance provider adhere to their code of ethics to avoid the conflicts, and also the setup of the assurance provider, which a lot of new incremental requirements are bringing through this particular standard. So therefore, there has to be more competent people to engage in the assurance engagement. And also assurance provider will look into these areas, which is very much important for the preparers. So as preconditions. So the assurance provider will look into the internal control environment of the company. So traditionally the companies had internal controls for financial reporting, but now since more importance came for the sustainability information, companies should also think about establishing the internal control environment for sustainability information. And also, the other important aspect is there has to be a proper governance mechanism, because this SLFIS S1 introduce the sustainability governance requirements, and that drives the entire sustainability reporting process of the company. So that has become a prerequisite for assurance providers to look into. And also the assurance provider will look into the people who are responsible for this related information, how the information is generated, the systems what you all are using for sustainability information, and also how the company is collecting the information from their value chain and the subsidiary entities, because the sustainability has a wider scope than the financial reporting. And finally, that will come up as the agreed terms of engagement. So these particular standards introduce the key requirements that has to be there in the terms of engagements with the assurance provider. So this is also very much important to have a look, because that's ultimately the contract which governs the engagement with the preparer and the assurance provider. So ISSA 5000 assurance standards will require the assurance provider to have more increased understanding on the systems, processes, controls, and the governance, and also bring out a great expectations for documentations, new additional documentations requirements brought in, and also to consider about the quality of data which used in reporting purposes. And also brought requirements which the assurance provider should consider, exercise their professional skepticism to fraud. So the certain questions might ask your assurance provider on certain fraudulent incident happen in your organization. And also the standard brings transparency in information reported. especially this SLFRS S1 introduce a new requirement whenever there's uncertainty in the information provided that has to be disclosed. So obviously the assurance provider can also link that requirement together with the assurance standard. And also the greater transparency in the assurance report, which assurance provider will attest, and also the assurance provider will provide certain inherent limitations which they has to consider in issuing the opinion or the conclusion, and also their adherence to the quality management and the ethical standards. So that will bring a greater transparency in the assurance report. So now let's understand the ISSA 5000 assurance process. Saviesha, over to you.
So thank you so much for that, Chathumin. So everyone, we have now looked at the changing sustainability assurance landscape, what ISO 5000 means for assurance providers. So now let's move into what I think is one of the most important parts of today's discussion, and that is, what does ISO 5000 assurance process actually look like from the perspective of you as preparers of sustainability information? Because ultimately, assurance is not something that happens only when the assurance team walks through your door. By that point, ideally, most of the hard work should already be done. So the quality of the assurance engagement is heavily influenced by the quality of the reporting process, the systems that you have in place, the internal controls over sustainability information, the documentation that you have built before the engagement even begins. So in this section, we are going to unpack some of the fundamental concepts behind ISO 5000, the difference between limited and reasonable assurance, and some of the areas where the standard introduces a more structured approach. So before we go further, I want to clarify three terms that are sometimes used interchangeably, but actually means quite different things: validation, verification, and assurance. So first off, let's start off with validation. Validation is primarily forward-looking. So it's about confirming a future-oriented claim, something like a target or a statement, a future-oriented statement, whether it is plausible based on the available evidence and assumptions. A very simple example that is given in the slide would be the company's 2050 net zero target. So if you tell the world, if you tell in your reporting, we are going to achieve net zero by 2050, the question for validation is not simply, have you achieved it? We are not in 2050 yet, right? So the question is whether that target is plausible based on the technology that is currently available, the technology the company is currently using, the pathways that the company has identified, your commitments, your policy commitments, and the assumptions underpinning the target. Then, secondly, we have verification. Verification is generally focused on the past or the present. So here we are asking whether the information has already been reported, whether it's truthfully stated or supported by evidence. So for example, take your scope 1 and scope 2 greenhouse gas emissions. If you report that your scope 1 emissions for the financial year of 2026 is 1,000 metric tons of carbon dioxide, verification will involve looking into whether that 1,000 metric tons is accurate and complete, mainly based on the underlying evidence and the methodologies that you have used. And thirdly, we have assurance. Assurance is much broader, I would say. It encompasses both historical as well as forward-looking information. It results in a formal conclusion expressed with a specific level of confidence. So if we take a full sustainability report, it will include historical emissions data, current performance indicators. It will include future targets that you have set, the transition plans and the commitments of the organization. So an assurance engagement over sustainability information can involve elements of both verification as well as validation. So for the preparers who have joined this webinar today, simply the takeaway is that you can't think of assurance as simply someone checking the numbers at the end of the reporting process. So depending on the information that is being issued, the assurance process will involve understanding your historical data, understanding your assumptions, understanding how you have set the targets, and checking for evidence that supports your forward-looking statements. Now let's move on to some of the foundational concepts that underpins an ISSA 5000 engagement. So these concepts are important because they influence how the assurance engagement is planned, how it's performed, and how it's concluded. And importantly for preparers, they also give a good indication of the types of questions that you can expect from an assurance provider. So as an assurance provider, the very first question that we need to ask is what exactly is the subject matter that is being assured? So specifically when it comes to ISSA 5000 standard, it distinguishes between sustainability matters and sustainability information. Sustainability matters can relate to any ESG topic, environmental topic, social topic, or a governance topic. So these might be defined and described through a specific legislation, a reporting framework, by the entity itself, or through a regulation. The sustainability matter is different. It's actually measured or evaluated against defined criteria. The sustainability information that results from this process becomes the information that is reported. So let's take a very simple example. Let's take climate, right? Climate is a very broad sustainability topic. So it has been set by the Central Environmental Act, specifically for Sri Lanka, with IFRS S2 coming into play. That is also a topic which it highlights. So within climates, we can consider different aspects like greenhouse gas emissions, physical climate risks, transition risk, climate-related opportunities, and internal controls and processes to manage climate-related risks. The information that is reported will include quantitative metrics, that is your emissions, any KPIs, qualitative disclosures, etc. So if we take greenhouse gas emissions, the topic is climate, the aspect is emissions, and the sustainability information that you are reporting will be scope 1, scope 2, and scope 3 emissions. Now, why is this distinction so important for preparers? Because before the assurance process can begin, as preparers, you need to be very clear about what information is within your scope. That means you need to define what are we reporting, what is the reporting boundary, what entities and operations are included, what data is measured, etc., and all of those things. So the more clearly that you think about these questions, the more efficient the assurance process becomes for you. And this is very important for you as an organization because sustainability information is not like financial information. The information comes from multiple parts of your organization. Your emissions will come from your facilities or your engineering departments. Your employee data comes from HR. Your supply information will come from procurement. Your biodiversity related information will come from certain technical experts, right? So the sustainability report brings all of this together. So from an assurance perspective, one of the biggest challenges that we have is making sure that all these different information streams will ultimately be traced back to a very clearly defined reporting process. Now let's come into one of the most important distinctions in sustainability assurance, limited assurance versus reasonable assurance. Now these are not simply different labels for the same engagement. The level of assurance affects the nature, the timing, and the extent of the procedures that are performed by the assurance provider. So if we take, first of all, if we take limited assurance, in limited assurance, the objective is to reduce the engagement risk to a level that is acceptable in the circumstances. So the level of risk is actually higher than that of a reasonable assurance engagement. The assurance provider will generally assess the risks at a disclosure level, and we will perform procedures that are less extensive than in a reasonable assurance. And the conclusion will be expressed in a negative form, mainly because the risk is high and we are doing less extensive procedures. So, what we will disclose in the opinion is saying something like nothing has come to our attention that causes us to believe that the sustainability information is materially misstated. The conclusion is in negative form. Now, if we come to reasonable assurance, it's a higher level of assurance. And the objective is to reduce the engagement risk to an acceptably low level. So the entire focus is to reduce the overall level of engagement risk. So because of this, the assurance provider will perform more extensive procedures. There will be detailed assessments of risks and controls, more extensive substantive procedures. And because of this, the conclusion is also expressed in a positive form. So we will say something along the lines of, in our opinion, the sustainability information is fairly presented in all material respect. So that is the difference between limited assurance conclusion and a reasonable assurance conclusion. So the most important point for preparers who have joined us today is that the level of assurance has implications for the organization. So if we move towards a reasonable assurance, so if you think your organization is ready for a reasonable assurance, you need to expect greater demands from assurance providers regarding data quality, regarding proper internal controls over sustainability. You need to have proper evidence for each and every claim that you make in your annual report. You need to have properly documented procedures, properly documented estimates, assumptions, a proper a method of governance, a proper governance structure that supports sustainability reporting. So when you're deciding between limited assurance and reasonable assurance, you should not simply ask which one do we want. So but the question you should ask is which assurance can our current reporting infrastructure support? Now, there are several fundamental concepts that are relevant throughout an assurance engagement. So mainly these include professional skepticism, professional judgment, fraud, and NOCLA, which is a short form for non-compliance with laws and regulations, materiality, sufficient and appropriate evidence, and documentation. So many of these concepts will be very familiar to those who have experience with financial statement audits. But sustainability information comes with additional challenges. The main reason is that sustainability information almost always deals with estimates, deals with assumptions, forward-looking information. And we are always looking at value chain information, quality, and mostly it's not quantitative statements, right? When you say sustainability, we are mostly dealing with qualitative statements. So if you take scope 3 emissions, for example, in many cases, an organization may not have complete primary data for every supplier. So most companies use estimates, use emissions factors, and secondary data. And this does not automatically mean that the information is unreliable, however, but it does mean that your organization needs to clearly understand and document what are the assumptions, why were they appropriate, what data was available, what kind of limitations that did we face when coming up with this calculation, and how can the methodology be improved over time. So that is the type of thinking that supports the assurance readiness of a company. Now let's talk about professional skepticism. Now, professional skepticism means maintaining a questioning mindset and being alert to the conditions that may indicate a potential misstatement. So there are several factors. Now, if your assurance provider senses these things within your organizations, then it means they will ask more questions. They will be highly skeptic, right? So these include if your reporting process is highly highly complex, if there are rapid changes compared to the previous years or previous months, if the disclosures attract a significant level of scrutiny by regulatory authorities, if you have very immature systems and controls relating to sustainability, specifically relating to waste collection data, water collection data, if you have immature internal controls, and if you're basing off your assumptions on significant management judgments, that means the auditor or your assurance provider will have a heightened sense of professional skepticism. And sustainability reporting actually has plenty of these things, right? So we are thinking about climate targets, scope 3 emissions, we're talking about biodiversity, human rights related metrics, and all organizations are making claims of net zero, of being carbon neutral, of being 100% sustainable. So these are all areas where stakeholders are increasingly interested in. It's not just what a company says, but how it can be demonstrated, how it can demonstrate that the statement is supported. So an assurance provider will usually come and ask you, how was this calculated? Who approved this methodology? How is the reporting boundary selected? What evidence supports this assumption? What changed from the prior year? Like these, the assurance provider will come and ask you questions. But if you can show the proper methodology, the calculation, the source data, the review process, and your audit trail or an approval trail that you have, you are in a much stronger position to face your assurance process. Now, as Chathumin mentioned, ISSA 5000 also places a very strong focus on quality, ethics, and independence. And the standard requires engagements to be carried out within a proper system of quality management. So in most audit and assurance firms, this will be based on ISQM1. So what exactly is ISQM1? ISQM1 stands for the International Standard on Quality Management 1 in simple terms. It requires an assurance firm to have a firm-wide system in place to make sure that the engagements are performed up to an approved or up to an appropriate level of quality. So that is not just about reviewing the work at the end of the engagement. It starts much earlier. So the firm needs to identify the right people with the right skill and experience. They need to have proper independence and ethical checks. They need to have appropriate supervision and a review process in place, etc. And also, on the other hand, ISO 5000 requires the practitioner to comply with the ethical requirements of the ISBA code. ISBA code is the International Code of Ethics for Professional Accountants that the assurance practitioners are expected to follow. These include the principles like integrity, objectivity, professional competence, confidentiality, and professional behavior. So, for preparers, the key message here is that when you're selecting an assurance provider, you should not simply treat it as a procurement exercise or a fee comparison exercise. You need to ask yourself, does my assurance provider have the right sustainability assurance expertise? Do they understand the industry? Do they understand our operating environment? Are they familiar with the reporting frameworks that we use, etc.? And also, it's very important to involve the assurance provider very early. The earlier they understand your reporting boundary, your criteria, the calculation methodology, the data sources, internal controls, it will be easier for them to identify and address possible issues before the final reporting deadline. Now we come to a very important section again, the ISSA, so ISSA 5000 that represents a move towards a more dedicated, sustainability-specific assurance approach. Now, it's simply not a case of taking existing generic assurance standards and applying it to sustainability information. The standard provides more specific requirements and considerations for sustainability assurance engagements. So let's take a look at some of the changes that are particularly relevant for the preparers. The very first change is the level of detail in the new standard. So at the moment, Auditors generally use ISO 3000 when providing the assurance. So it's a broad assurance standard that can be applied to many different areas like internal controls, compliance information, non-financial performance indicators, and forward-looking financial information. So because ISO 3000 is designed to cover such a wide range of engagements, it's very principles based and does not provide a detailed guidance specifically for sustainability information. So this is where ISO 5000 is actually very different. ISO 5000 has 212 requirements, which is more than double of the equivalent requirements in ISO 3000. And it has been designed specifically for sustainability assurance and gives more detailed direction on matters such as risk assessment, on evidence estimates, forward-looking information, etc. The next major area is the entity's system of internal controls. Under ISO 5000, the assurance provider may need to obtain a more specific understanding of the entity and its internal controls over sustainability information. So that includes a limited assurance engagement. This is very important. This is a very important shift for the preparers because historically, sustainability reporting in many organizations have been less controlled than financial reporting. You may have financial data that goes through multiple levels of reviews and approval, but sustainability data may still be collected through spreadsheets, through emails, through manual processes. So ISO 5000 clearly shows that you need to have a greater discipline. You need to have clear ownership and defined responsibilities when it comes to your data. The next difference is the use of a component practitioner and other practitioners. So sustainability information often comes from different locations, from different subsidiaries, or from different parts of your value chain. This creates challenges around the consistency and reliability of the information that you're getting. For example, if you imagine a group with operations in 15 countries, right? Each country may collect energy consumption data very differently. And each country will have different systems. Some may have automated meters, others may rely on manual controls. So for the preparers, this means that group level sustainability reporting actually requires strong processes for standardization, for having a proper method of consolidation and of review. Right. So definitely the message in these key changes, as you can see, is very simple. Your sustainability information should tell you one coherent and integrated story. So let's now shift from understand. Now we got a good understanding of the requirements of ISO 5000. Now let's shift to discussing what organizations can actually do. So this particular slide that you see brings together the entire ecosystem. It's sort of a recap of what we have discussed so far. So at the very start of it, we have the entity system of internal controls. It includes the control environment, the risk assessments, the monitoring, the information systems and communication, and control activities. So these controls need to support your sustainability reporting process. And then, secondly, you can see we have the reporting component itself. The organization needs to determine what information is relevant to the intended users and apply the appropriate reporting standards or the regulatory requirements. So these frameworks actually provides the criteria against which the sustainability information is prepared or evaluated. And then thirdly, we have external assurance. The assurance provider independently evaluates sustainability information against the applicable criteria and provides a conclusion, as I mentioned, that is designed to enhance the user's confidence. But I want to emphasize something here. The assurance provider cannot compensate for an absent reporting process. So if there's no clear definition of the metric, no consistent data collection process, if there is no ownership or if there's no evidence available, assurance actually becomes much more difficult. So when we think about assurance, we should actually think about these three connected layers: the reporting criteria, your internal systems and controls, your independent assurance. So all of these three things, all three needs to work together. Finally, from my end, let's talk about the risk assessment process. So this is an important process of the assurance process because the assurance provider needs to understand where there might be risks of material misstatement. So they will consider information obtained during engagement acceptance and continuance, and they also will consider information from your legal and regulatory environment. So they will also understand your entity and environment by digging into your operations, your organizational structure. The assurance provider will have to understand your governance structure, your ownership, and your business model. So this is where the preparers should recognize that the assurance is not just about testing individual numbers. So the assurance providers will also consider your reporting policies where they are consistent with the applicable criteria. And they will again assess the suitability of the criteria by themselves. So they will see whether it's relevant, whether it's complete, whether the disclosures or the reporting criteria is reliable, whether it's neutral, and whether it's understandable. So it means that the assurance provider may ask questions that will go beyond where did this number come from. So as you can see in the slide, after evaluating all of these things, the assurance provider will come and ask you targeted questions like who owns this metric, who reviewed it, what are the controls that you have to support this metric, what are the assumptions that you make, right? And what happens if a particular data goes missing? How did you assess the risk of error, etc.? So this is why I encourage organizations that I have joined today to adopt what we call an evidence-first mindset. So when you prepare a disclosure, don't just think about the final wording. Think about the evidence that sits behind it. So when you calculate a metric, don't just save the final number, but save the calculation, the source data, the methodology, and the assumptions. Because when the assurance process begins, you want to be able to tell the complete story. Right, and with that, let's move into the next section where we will look more specifically at the differences in the new assurance reports that you will be getting from assurance providers based on ISO 5000. So over to Thimansa to take it over from here.
Thank you, Saviesha and Chathumin, for laying the foundation of the standard. So now let's take a look at what changes users will actually see in the assurance report itself. So one of the most noticeable improvements is the introduction of tailored illustrative report formats. So unlike ISA 3000, where practitioners often adopted a generic report template, regardless of the subject matter, ISA 5000 provides dedicated report formats designed specifically for sustainability information. So these can readily be applied to reporting under frameworks such as IFRS S1 and S2, ESRS, or even CSRD. Another important enhancement is the introduction of a dedicated other information section. So this mirrors the approach we already see in financial statement audits under ISA 720. It allows assurance providers to explain their responsibilities for reviewing other information included within the sustainability report, while clearly distinguishing that work from the assurance conclusion itself. The standard also requires much greater transparency around materiality, reporting boundaries, and scope. Users will now receive clear explanations regarding what sustainability information has been covered, whether value chain information has been included, where estimates have been applied, and any limitations affecting reported information. Finally, ISA 5000 provides clearer reporting requirements where multiple practitioners contribute to different parts of the engagement. this becomes increasingly important as organizations obtain information from subsidiaries, suppliers, overseas operations, and other participants across the value chain. To help practitioners apply the new requirements consistently, ISSA 5000 includes a comprehensive set of illustrative assurance reports. So Appendix 3 contains several practical examples that demonstrate how reports should be structured under different engagement scenarios. So these include assurance reports covering complete sustainability disclosures prepared under IFRS S1 and S2, or selected sustainability metrics, or reports prepared using multiple reporting frameworks, and also engagements that combine both reasonable and limited assurance. The standard also provides examples of modified conclusions, including qualified conclusions, adverse conclusions, and disclaimers of conclusions. So now let's take a look at some practical examples of two assurance reports prepared under ISA 3000 and ISA 5000 each. Let me share my screen. Yeah, so as you can see, this is an assurance report done using ISA 3000. And as you can see, it's very simple and straightforward and includes mainly the scope, the management's responsibility, our independence and quality management, our responsibility, and the conclusion. So this is a very straightforward report. And if you see the ISA 5000 report, this mainly includes a few additional paragraphs as well. So the conclusion and the basis of conclusion is very similar to ISA 3000. The few of the additional paragraphs you can see is the emphasis of matter, and other information paragraphs. And apart from that, we can also see a paragraph dedicated for inherent limitations in preparing the sustainability information. So this inherent limitation paragraph is basically for topics which include professional judgment assumptions or any uncertainties in sustainability information. Also, the practitioner's responsibilities is just an extension of the previous section we had for our responsibilities. It includes the same set of wordings, just a few differences in the content. And similar to the previous standard, the conclusion is set out. The only difference here is that instead of the engagement leader's name in Sri Lanka, we use the membership number, the CA membership number of the particular practitioner. Now that we've explored how assurance reporting itself is changing, let's shift our attention to an equally important question. So what should organizations do before assurance even begins? So obtaining assurance is not something that starts when the assurance provider arrives at your doorstep. In reality, successful assurance engagements begin months earlier through effective planning, governance, and establishment of reliable reporting processes. So one question every organization should ask itself is, are we actually ready to report sustainability information? Because if the answer is no, assurance will simply expose weaknesses that could have been addressed much earlier. And many organizations are still asking whether they should be preparing now, particularly when ISA 5000 is yet a voluntary standard. The answer is absolutely yes, because preparing early allows organizations to develop mature reporting processes gradually rather than responding under tight regulatory deadlines, considering the fact that ISA 5000 will soon be mandated in Sri Lanka too. So now that we've discussed why organizations should begin preparing early, the next question is how they should prepare. So one of the biggest misconceptions about sustainability assurance is that it's simply an exercise carried out by the sustainability team or the assurance provider. But in reality, becoming assurance ready is an organization-wide transformation. So in other words, preparing for sustainability assurance, it's not about producing a report at the end of the year. It's actually about embedding robust reporting processes throughout the organization. And there are several key building blocks that every organization should focus on. So the first one is governance. So organizations need clear ownership over sustainability reporting, and responsibility should be assigned for each disclosure, metric, and underlying assumption with appropriate review and approval processes in place. The second area is resources and capability. So high quality assurance reporting requires people with the right technical knowledge and sufficient time to perform the work. And the third critical area is documentation and supporting evidence. So one of the most common challenges encountered during assurance engagements is not necessarily inaccurate data, but the absence of evidence to support reported information. So every significant disclosure should be supported by appropriate documentation, whether those are calculation files, methodologies, management judgments, assumptions, or even source documents. Another important pillar is ensuring that sustainability reporting aligns with the organization's business model and overall strategy, because sustainability reporting should reflect how the organization creates value over the short, medium, and long term. It should also support strategic objectives rather than existing as a standalone compliance exercise. Equally important are the systems, processes, and internal controls that support reporting. This is because organizations should establish robust systems capable of collecting, validating, and consolidating sustainability information from across the business. This means introducing controls over data collection, review, approval, and consolidation, and establishing clear audit trails from reported metrics back to the original source documents, and ensuring every figure disclosed can be independently verified if required. Finally, organizations need to establish clear reporting criteria and measurement methodologies. So before collecting data, organizations should determine what reporting framework they intend to use, whether that's IFRS, Sustainability Disclosure Standards, GRI, ESRS, or any other applicable framework, and later ensure that appropriate measurement methodologies are also consistently applied. At the same time, organizations must define the scope of reporting. So this includes determining which operations, subsidiaries, and value chain activities fall within the reporting boundary, and conducting a robust materiality assessment to identify which sustainability topics are most relevant for disclosure. This includes also documenting how material sustainability matters have been identified, the stakeholders consulted, and the rationale supporting those decisions. Another area that increasingly receives attention during assurance engagements is the value chain, because many sustainability metrics extend beyond the organization's direct operations and rely on information obtained from suppliers, customers, and other business partners. So organizations should therefore identify what third-party information is required, establish processes to collect and validate that information, and understand where limitations exist if certain data cannot be independently verified. So finally, I would encourage organizations not to wait until their reporting deadline to involve the assurance provider, because engaging with assurance practitioners early allows important discussions around reporting scope, evidence expectations, methodologies, and timelines to take place well before the formal assurance engagement begins. Ultimately, becoming assurance ready is not achieved by preparing a report at year end. It is achieved by building strong governance, reliable systems, effective internal controls, and high quality evidence throughout the reporting cycle. Organizations that invest in these foundations today will not only experience a smooth assurance process, but will also provide sustainability information that is more reliable, more transparent, and ultimately more valuable to investors, regulators, and other stakeholders. So we are now ready to hop on to our Q&A session, and I would like to invite all participants to raise their queries in our chat box.
So I would encourage all the participants to post your questions to the Q&A chat box, and we will be happy to take it up. We will be happy to allocate about 5 minutes for any questions that you may have. We are happy to take up anything. So as we discussed throughout the entire session, the transition that is made towards assured sustainability information is not simply about preparing for an assurance engagement at the end of your reporting cycle, right? So it's about strengthening your governance, your systems, the processes that you have, the controls, etc., and getting evidence that supports credible and trustworthy sustainability reporting. So it seems we do not have any questions at this time. So with that, I would like to say that we have come to the end of today's session. So today's session on ISO 5000 Unpacked, what preparers need to know. So on behalf of the Deloitte team, I would like to sincerely thank all of you for taking the time to join us today. And we would also like to thank all of our speakers for sharing their valuable insights and practical perspectives during today's discussion. So please stay tuned for more insights, for more updates and thought leadership through Deloitte ORBIT, insights that keep you on course. Thank you once again for joining us, and we hope you found this session valuable, and we look forward to connecting with you again at our upcoming sessions. Have a wonderful day.